Bank of Tokyo-Mitsubishi. Thrilled to have you late in your day. Derek, we were just talking with Simon Kennedy, our chief international economics reporter, about the immediacy of Portugal. What are we expecting in the next few days? How can they sustain a 9% two-year yield without an immediate response?
Yeah, I think it's certainly becoming very difficult, but the Portuguese stance is, of course, that they feel they don't want to get into a situation that happened in Ireland of agreeing a bailout, the terms of a bailout before an election. So I think the near-term scenario could be that there is some form of possibly temporary assistance from the European Commission, possibly a bridge loan from the IMF. These are the kind of ideas that the markets are thinking about at the moment. But, certainly I think going from here until the aftermath of an election on the 5th of June is becoming more and more unrealistic by the day.
I like that idea of struggle to get to June 5th, as we talked to Simon about. Here's a great chart, folks. It's just a Portugal-German spread. Who will blink first, Lisbon or Frankfurt? You mentioned the IMF, Derek. They've got to be watching this. And isn't there just a point where they play the bad cop and they dial 1-800-TRICHET and say, enough, do something?
Well, of course, the immediate concern is simply the fact that Portugal don't want to go to the EFSF. I think the broader view on the market, and for one reason why the euro is relatively stable at the moment, is that the EFSF is in place, and ultimately the prospects of Portugal or any other periphery defaulting anytime soon is next to zero, because the system is in place, the structure is in place to ensure that if push comes to shove, ultimately the system is in place to ensure that Portugal does get the funds that it requires.
I mean, you look at this, Derek, and I mean, the flow of information blurring by here. I want to bring up a U.S. debt chart and get the view from London on this. Rex, if you'd bring up the debt chart, chart 2. We've played this chart like 3 or 4 times in the last couple days. There it is. Perfect, Rex. Right. Derek Halpenny, the view from London of the United States with 14 trillion total debt outstanding. From where you are, do we just jawbone forward to 2012? Or do you actually presume we will see something done in the United States about our fiscal debt this year or this quarter?
Well, I think there's 2 elements to that. The first element is, of course, that the ceiling on debt is in place, and therefore there is some kind of near-term pressure for an agreement to be reached to eliminate that degree of near-term uncertainty. But I think further out, the clients I speak to and the market participants that I'm in contact with, the vast, significant consensus in the market is that in terms of long-term significant structural reform of the fiscal situation in the US, it's a story beyond the presidential elections in 2012. And I think for now, the markets are more than comfortable with the belief that we can carry on as we are until then, on the assumption that beyond the next presidential elections, that we will get more significant consolidation of the fiscal picture.
Yeah, interesting. Derek Halpenny, thanks so much. Bank of Tokyo, Mitsubishi.